all, I take the opportunity to wish everyone a happy New Year 2026. And I'm sure as every year we expect this year too will be a great year. Not only for each one of you as individually, even for the country as a whole, and for the investors in general. I should get a great experience in 2026. As you know, 2025 was a year of consolidation. The equity market would have given about 3 to 5% kind of return. But the year was filled with lots of action, right from the odds that we have faced internationally, and also some of the tough decisions that India was taking against those odds that was hitting the international trade market. India took few decisions such as GST, such as interest rate cut. All of them turned out to be very good for India, creating a platform for the year 2026. So I would call it as a 2025 year of consolidation, year of resilience, and year of action, which will make the India's future more brighter, which is now creating a wave for Reform 3, which our Honorable Prime Minister has announced that will drive the Indian economic growth to the next level for the year 2026. As I speak, I'm also happy to say that we crossed as an overall economy Japan GDP number. We are now become the fourth largest economy in the world. So Reserve Bank of India, since the time the new governor took charge, has been clearly focusing on driving the growth. The narrative which Reserve Bank of India always keeps is inflation and liquidity. But this time around, the narrative got changed from inflation target to the growth target. In order to drive the growth momentum, they not only cut the rate by 125 basis points, they also ensured the liquidity in the system is abundant. Some of the risk framework, which most of the banks have to follow, also have been eased in order to ensure the banks are able to lend more money to drive the growth. This, in my view, would reduce the cost of borrowing, which is most important for anybody to buy assets, to create new asset classes, or invest in business, or start a new business. You need to have a low cost of borrowing. Definitely the 120 basis points rate cut has made the cost of borrowing come down. We are already seeing this in the home loan rates, which is now today one of the lowest. The banks have started offering 7.3%, thanks to the RBI cutting rates by 120 basis points. Most of the companies used to get money at double-digit rate, 10% plus. Today they are able to get access to the funds at below 10%, which essentially means increase the profitability of these borrowers, whichever business in which they are investing. Therefore, the 120 basis point, my belief is, it's actually a great move from Reserve Bank of India, especially when a time when US were hesitant to cut rates, whereas India was not hesitant to cut the rates because of the single factor, which is inflation is lowest, and therefore moving away from inflation target to the growth target is something, a shift I think is going to benefit India to give the cost of capital as lowest for anybody who wants to build business. Mutual fund has been a strong force in the field of investment in the capital market. The last few years, mutual fund industry has done wonders thanks to all of you as investors who have reposed your faith in mutual fund investing by your investing in the SIP. This has actually made India to be one of the largest provider of capital for raising funds in the equity capital market. And this will only get better as we move forward. So mutual funds are now gain the slot, I would say, of the preferred investment vehicle for investors in India. This will only make it more bigger as we move forward. Therefore, structurally, mutual fund industry is becoming a strong investment vehicle, along with other investment vehicle which the Government of India has been driving, such as an NPS, such as insurance companies. If we take collectively, I think mutual funds now becoming a prominent player in collecting the financial savings of every investor in the country and then feeding into the capital market to provide capital to the needy borrowers or needy companies to build the business, which in my view structurally will make the India to grow to the next level of growth through the mutual funds participate in the Indian capital market growth by generating investment opportunities as well as generating return for the investors like each one of you. See, portfolio construction always depends on how the individual's risk appetite is structured. But having said that, whether it is a 2025 or the 2026, the principle should always be applied to have a core portfolio and satellite portfolio. And the year 2026, as we moving in, the asset allocation will largely remain split between the flexi cap fund, which is largely investing in large cap, mid cap, and small cap, and multi cap fund, again investing across the market cap. And this fund would become one of the primary asset class to invest. Second is multi asset allocation fund, where the investments are generally made between all asset classes, such as an equity, fixed income, REIT, InvIT, gold, and silver. This will again remain one of the great asset class to look for in 2026. Again, being a part of the core portfolio. The last question which comes in all of us mind is about the equity market go up, what should I do? If the equity market comes down, what should I do? Frankly, we all as individuals will be finding it very difficult to find an answer to this and move the asset allocations very seamlessly. Very difficult for individual to do that. Money manager does this job through the balance advantage fund. These are three asset classes should be part of the investing theme for 2026. But having said that, building core portfolio I think is key. Second is stay focused on investing for long term is the key. They're not going to change. As we have seen in 2025, absolute no return was there in the equity about close to 5-6%. That doesn't mean asset class is bad. We'll always see a good year, we'll always see a fall by bad year. Then what is key is actually is not look at investing only for 2026. Look investing beyond 2026. See, ABSLAMC mutual fund being in the industry for the last 31 years, having seen multiple cycles, we also been focusing on rolling out product that are relevant, suitable for the investors, at the same time giving a choice to the investors to choose between the various asset classes, whether it's a fixed income, whether it's an equity, whether it's a passive, whether it's an active. I think we as a fund house believe that all this product have to be offered the best interest of investors. And having done that, we always encourage people to choose between not just only an active, even passive should become part of the overall portfolio. Therefore, construction of the portfolio, taking into account active funds and equity, taking into account passive funds and equity, taking into account active funds and fixed income, as well as fixed income passive funds. This should be forming part of the asset allocation in terms of allocating money to the various asset classes. I think passive and asset class definitely gives you advantage of lower expenses. We must also remember, when the market getting expanded, money manager will get wider opportunities to find companies, both from the existing well-established companies to the new age companies. You will find many opportunities fund manager will find in order to generate the alpha that is most needed in the active funds. Therefore, we must look at both active funds and passive together as investing opportunity from investors' point of view. Things are not going to change, whether it is 25, 26, even beyond. I think coexisting model will remain. I think ABSLAMC mutual fund is extremely convinced and committed to provide these opportunities for the investors. Therefore, I would encourage everyone to look at both together, active and passive, go hand in hand in your investing approach. So asset allocation, of course, always depending upon the risk appetite. Having said that, we must always take this into account. Interest rates are today is close to about 5.5% to roughly about 7.3%. It essentially means the reselling that we make after adjustment for taxes, you must be able to generate more than 7-8% kind of return. So where would the return will come? It will come largely in equity if I consider for long-term investing. Therefore, in asset allocation, always we must remember, as long as the money is for long-term, you must remember to keep large proportion of the asset allocation towards equity, which is between the funds such as flexi-cap fund, multi-asset allocation fund, multi-cap fund, and BALASUBRAMANIAN fund, or in small and mid-cap fund. That should be the large component of the portfolio should go. At the same time, hybrid funds also provide a great opportunity within the equity space. We must also remember that conservative investors who do not want to take the risk. There are also products that has come with a 2-year taxation on the fixed income come equity kind of product. Also could be considered taking into account one, conservatism that one may apply, and second is the 2-year willing to hold the investment, not having high expectation of the return expectations. Therefore, such investors can also choose fixed income oriented equity fund could also be considered as part of the asset allocations. I think broadly the way I look at any asset allocation, first component should be equity from long-term point of view, second component should be hybrid, and third some allocation towards the fixed income. These 3 asset classes I think will ensure that the overall portfolio is constructed in such a manner, taking into account the market trend as well as the overall risk appetite that one may have, which will more or less will common for most of the investors. It's simple. Noise levels will always be high. I think 2025 were filled with a lot of noises coming from geopolitical risk, trade war, cyber attack, all these things were there. And what held us India in a very strong footing is a complete resilience that India has created all these years, has been helping the India to be the fastest growing economy in the world. Therefore, what is most important for all of us is have a faith and have a belief that the Indian economy will continue to grow. At the same time, predictability will become extremely tough. Therefore, there is absolutely no point in trying to speculate what will happen tomorrow. I think we must have the faith and the belief that India will continue to be the large economy as we go forward. Therefore, keep that faith on and continue to make the investment. Don't make the mistake of stopping your investment because something you have heard and basis which you suddenly feel that it become uncertain. But those days are gone. Because the ability to now react to the uncertainty to ensure that we as economy continue to grow is far higher than what was in the past. Therefore, have the belief in place and stay invested for long term. I think will be key to the success.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.